Hello, welcome back everyone. Just had a little bit of an issue, but we're sorting it now. Okay, so we're gonna be going over what we think is gonna be happening: dollar, euro, USD. So yeah, another weekly market review. Then we might look at pound dollar as well. We'll look at a bit of US 100, a bit of US 500 as well. We'll look at bonds as well. Yeah, pretty much an all rounder. Gold, it's just been going up constantly for a while, just came back down. Potentially, we're going to retrace a bit as it's hit a all-time high recently. If it is gonna go lower, the furthest I'd say is here or here. If it breaks past here and there, it's gonna start looking potentially lower. But for now, to about 3.2, 3.266. This is not too bad of a range, but we're not even looking at gold right now. This is futures, by the way. It's better movement. But yeah, so let's start off with a bit of bonds. So bonds wise, that's a fair value gap. It's being in that range for a bit. Depends on what this week wants to do. But we are expecting lower prices. Let's look at. So yeah, this is failed to take the low, the lowest one to take the low, and this also failed to take the low. So potentially what we might see is bonds start to come up, rejected off that, took the low, but failed to close below it. So potential to come up. Depends on what it does this week. If it comes up, respects that, and then comes lower and then closes below this, we'll potentially see bearish price action. But until then, we're looking at higher prices. If it is going to go higher, then we want dollar to be going lower. If this chooses to range, so range in between here, we can see price potentially ranging in between here. So let's say price decides to go up there, back down. We may see a movement of the same but opposite with here. So up down will mean down up, so it could potentially go up into there. Ideally, we want it to start moving higher up into there. So if this week we do see a lot higher prices in bonds, breaking past this completely, closing up around here, while dollar ranges or comes up, goes down to there, comes back up. If it ranges like that, we'll potentially see price coming back down into this inverted fair value gap, which would allow for dollar to seek higher prices. I mean, that's how far it can potentially go, but we would ideally want it to go past the 50% range of that range created, potentially just up into there, where the balanced price range was, purely because it's taken the low. So now that it's taken the low, it can go to the balanced price range. So if it hadn't taken the low, it would wait until it taken it. Now that it has, it rejected off this monthly candle, so it has that chance to potentially come back up into the range. You can see here, highest point in the orange, optimum trade entry in the green, low point in the light grey area, potential for another entry in the darker grey area, and then ultimately creating a low at the blue. That's if that whole time period is going one certain way. So this is from December to December. So that's for the year. So we potentially may see higher prices, and then everyone's like, oh yeah, dollar's doing well now, dollar's doing well. Everyone starts to buy, and then boom, back down again. Yeah, psyching everyone out. So at this moment in time, we're waiting for that slight change in structure. It's holding structure pretty well over here. Want to see one final movement lower into this fair value gap. On the weekly, this is the wick, so ideally if it is to go lower, slightly lower, we'll still want it to wick above there, but mean threshold of this order block is ideally where we'd want price to stop going lower to then start seeking higher, just to get up into this liquidity gap here, well, liquidity void, potentially up into there to fill it and then start to look lower. But if it does break this point here, then we'll start to look for these highs. But until then, we're just looking for at least here and here. If it does break it, good. We'll start to see a go back lower, back into there before taking it higher again. So yeah, that's the current evaluation on what dollar is predicted to do, and then we'll go on to euro now. Euro USD is the most thingy. So it's taken this higher term high. I'm pretty sure it's on the monthly as well. Yeah, monthly. It's taken it and it dropped back lower. It's nearing the end of the month, so 27th of April right now, so we've got 3 more days. So it will potentially look to just close off on the whole month. Whole month was going higher. If it decides to go up into there and then starts to come back lower again for the rest of if it comes back lower for the rest of the week, yeah, that's what we would prefer. It would allow that next month to then take it lower. So ideally for the month of May, we're looking for price to come back lower, give another optimum trade entry for the year. So on a yearly time frame, it would look as if the second half of the year, well, coming second half of the year is second third of the year, it's like the New York kill zone of the year, and like that's what it would seem like. So we're predicting price to start heading lower once it reaches that fair value gap over there. It's there on the 4-hour, I believe, as well over here. So what we are predicting as of yet is it's accumulated, it's created equal lows, manipulation, and then distribute lower into these levels. And like I said, with dollar, because this is pretty much very similar, see on the weekly, if it decides to close below here, we'll potentially see it come back lower or higher into this inverted fair value gap to then take it lower into here before looking to start reversing back up to seek these equal highs. These are 2 equal, same with dollar, so we're gonna go there at some point. Not only that, it's in line with this, so this is the change of character, I believe, on a monthly high, where there's change in the state delivery. So the reason why I believe that's the change, well, that's the high, that's the fair value gap. It broke it here, so technically you can use this one, but because this is the highest point, we're just using the highest point. Comes back in at optimum trade entry, and then start to see higher. It going lower, it's still fine, so it can still come down to the 0.5 level, and then it will look to reach the 1 standard deviation, which is clearing it. You have to allow for the 0.5 as like an area that it can still reach. So at that point, we'll be looking at this fair value gap. At that fair value gap, you can see it reaches the 0.25 level of that swing. And at that point, if it does go there, then it will look to come back to the 0.5 level, which goes to 1 standard deviation, coming back to 0, and then continuing off to the 2nd standard deviation. That's the higher time frame biases. So yeah, we're looking for accumulation, manipulation, distribution. Now let's look at a bit of pound dollar. So pound dollar, pound is looking a bit stronger than the others. It's created equal highs. It's reached the 2nd one. So now it's gonna look to do this. So it's reached this area, it's created equal highs. If it's gonna come back lower, could potentially look to go back in this fair value gap, because this is more bullish than the others at this moment in time. It potentially would come back lower to around here. That's if dollar's going up to there. If not, half of this wick around here, and then look to start seeking the equal highs here and the equal highs here. Over here, it's the same thing on the monthly. Went up, could potentially range here before going to the 1st standard deviation, and then coming back lower to here, using this as an inverted fair value gap. But that's pretty much all of that. Now we'll just do a bit of ES and Nasdaq. So ES for the month, it's went lower, took out these equal lows, went to here. Everyone invested in the S&P 500 was like, nah, gotta get out, gotta start selling now. I was like, nah, it's probably still calm. This is the greatest opportunity anyone could have got to buy up if they were more, instead of monthly, just predicting when it's likely to be at a low point for it to be buying, and then high point for it to be a sell. So went here and it started retracing back pretty heavily on the weekly. It will depend on what this week does. So if it decides to come up into there, because you've got to allow for that liquidity void along with the fair value gap, so that range, if it does decide to go up and then start start going lower, will change the narrative. But at this moment in time, this is equal highs. It's accumulated, it's manipulated below these equal lows into a higher time frame order block, and now it's potentially going to start manipulating higher. If we look at the daily, let's see if there is any change in structure. So at this moment in time, there isn't much change in structure. I mean, it's went lower, respected the consequent, like, well, this hadn't even reached there, reached here, order block, and then it's went higher. This it would likely want to fill, purely because this is a gap liquidity void, so it would ideally want to fill that just to make that price area efficient. It's went lower, it would potentially go lower up to this point, because this is, again, same as the other part, a liquidity void. There's no actual trading going on from this low and that high. There's no trading going on there, so it potentially wants to come back lower, hit this order block, and then start to seek higher. So it'll probably use the consequent encroachment of this gap to then take it lower, and then from there to start taking it higher. That's for that. Let's look at Nasdaq. Same here, but Nasdaq seems to be a bit more bullish than the other one, but same idea. YM's the weaker of the two. If it does go lower, it could potentially go lower, weaken that, and then going higher. But that's all of the reviews. I hope you guys enjoyed. If you enjoyed, leave a like. Make sure to subscribe for more. Turn on notifications so you're updated when I keep doing these weekly reviews. And yeah, peace out. Thank you for watching.